So when I was trading Forex mainly, I basically went through so many brokers. It was unreal. In fact, I don't think there's a broker out there that I haven't got an account with, you know.
It's not a game, it's a rich thing.
Hi guys, welcome back to Investor Prime TV. If you're new, make sure you subscribe and follow me on Instagram at Investor Prime. Alright, let's get into today's video. In this video, I'll be sharing with you 10 things you must know before you start Forex trading. And these are vitally important that you understand these and you consider these before you start. So the first thing you must know is you must know your markets. So before you do this, before you undertake Forex trading, do some research about the different markets in Forex, like the Euro US dollar, GBP US dollar, etc. They have different volatilities, different liquidities, so you need to understand the markets that you're going into, research on different markets, and decide which one you would like to go into. And while you're deciding which market is best for you, one of the things you should consider as well is your situation, how much time you can dedicate to looking at charts and looking at that particular market, and also understand where to get appropriate financial news for that market. Like for instance, if you're looking at Euro US dollar, you need to understand where to get news, financial news for the euro, and also financial news for the dollar. Alright, point number 2 is make a plan and stick to it. So you need to draw up a plan that you would like to stick to based on the markets that you've chosen, the time frame that you're going to trade in, the time you're going to trade, how much you're going to dedicate to researching and looking for opportunities in the market. So all of these need to be considered, and also your risk tolerance you're going to have to each trade, your capital, how much capital you're going to risk at any given time, and how much capital you're going to have overall. And also you need to take into account capital on margins, because these are leveraged products. So you need to understand the margin requirements that the broker requires. So effectively you need to create a trading journal beforehand, what you're going to trade, when you're going to trade, how you're going to trade, and how you're going to manage them. So basically when you get into the trade, how you're going to manage the trade, if it's going in your favor, if it's going against you, how you're going to manage those. Also how you're going to manage your emotions when you're in this trade and before you even take the trade, and also leaving the trade or exiting the trade. Basically, you need to have these planned out before you even look at anything to do with trading. So point number 3, this is pretty much one of the most important points, and that's practice. You need to keep practicing. Once you've formulated a plan, once you've chosen your market, you need to keep practicing to see first of all if your strategy works, if your plan works, and also any mitigations that you have to put in place for your plan. Maybe you've decided, okay, here's my plan that I'm going to use in order to trade based on your plan, and then you realize, you know what, a couple of points that I put in my plan are not working out based on this time frame, based on this time of day I'm trading, based on this security I'm trading. Let's say you've got 5 points that you have to stick to. You have to go through them progressively in order to place the trade. So you go through all 5 points and then you realize, okay, point number 5 doesn't really fit. It could be maybe an indicator you've chosen for that particular trade, that particular security, that particular time frame, but you realize, you know what, this indicator doesn't work. You know, it doesn't work as intended. So you can adjust point 5, maybe use a different indicator, or take out that indicator altogether, because maybe it's contradicting other indicators or what you have in mind of how that trade should work out. So you need to keep practicing. Practice makes perfect. So point number 4 is basically, in a way, is looking ahead. You need to forecast the weather conditions of the markets. So basically you need to look ahead before you place a trade. Let's say you're planning on holding that trade a couple of days or a week, couple of weeks, however long you're planning on holding that trade. You need to look ahead to see what could and what would impact your trade. So any influences in the market, so for instance, any news announcements that take place, like if you're Euro US dollar and maybe some interest rates are being announced or introduced in the next coming days, this is of course going to impact your trade majorly. So you need to look ahead, plan ahead for these factors that could influence your trade and put contingencies in place for your trade in order to weather these storms out or possible storms in the market. So point number 5, and this is very important, is that you need to know your limits. So basically you need to know the capital that you're starting with, what you can trade, how you can trade, and basically what you can do and what you can't do. So for instance, if you start off with maybe $10,000 capital in your trading account, you can't be trading like you have $500,000 in your trading account. It's just not possible, or it's a very quick way to wipe off your account because you're over leveraging yourself. So you need to stay humble basically. You need to know, okay, this is how much capital I have, this is what I can put into the markets, and this is realistically what I can get from the market. You're not going to start off with maybe $10,000 or even $100 and tomorrow you're going to be a millionaire. You know, that's not going to happen. And part of knowing your limits is being very patient with yourself, with the market, you know, and with your goals, being realistic. So point number 6, and this is pretty much an add-on to point number 5, is know when to stop along the way. So basically this is placing stop losses. It's easy to get into a trade. So basically you've created a trading plan based on the markets and you followed all these points. You know, you followed your trading plan. You're like, okay, I know when I'm going to get in. I know how long I want to stay in. Okay, but also as vitally important as those steps, you need to know when to get out along the way. If the trade is not working out in your favor, or let's say the trade works out in your favor very quickly, you also need to get out with a profit. Or if it's not working in your favor, you need to get out on a loss. You understand? So knowing when to stop along the way is very important. So point number 7, in my opinion, is probably the most important point. If you take nothing else from this video, take this point. And that's, check your emotions at the door. I can't stress this enough. If you get into a trade and your emotions are not checked at the door, then you can easily self-sabotage. For instance, you have a trading plan, it's solid, perfect. 5 steps you want to take. You know what to look for in the market. You know when to trade. If you're a trend trader, if you're sideways trader, or if you're a reversal trader, you know that. You know the indicators to look for. You follow your trading plan down to a T, right? You're like, okay, 3 months or 3 weeks or 3 days, I'm going to hold this trade. All right. I forecasted what's going to happen. Maybe in a week's time, there's going to be this news announcement. I've put a contingency in place for that news announcement. If it happens, it's going to happen, basically. But if it happens and basically there's a lot of volatility, okay, my contingency is in place. But if you carry on your emotions into this trade, or when you're managing this trade, if your emotions creep up on you and you haven't checked them at the door, it can be detrimental to your trading success for that trade. Don't bring your emotions with you. Alright, so point number 8 is also very important. Keep it slow and steady. What I mean by this is that investment in trading, like I've said, it's a long-term game. Okay? So you need to keep it slow and steady. Little profits here and there all amount to something. Okay? Usually something substantial. You don't even realize it because you're getting small profits along the way. Alright? It's not about you put in, let's say, $10,000 in a trading account and then you place one trade that you're leveraging maybe $20,000, you know, because of margin, you might be able to do that. So you're leveraging $20,000, which basically means that you can wipe out your account of $10,000 in a matter of hours or days, you know, depending on the swing, how the market moves against you. What you need to do in order to be slow and steady is say, okay, $10,000, every trade I'm gonna risk 1 to 5% of my capital, which basically means $10,000 I'm going to risk $100 to $500 for every trade. The worst that would ever happen is that I lose $500. I can rectify any mistakes, and most importantly, the market has allowed me to learn from my experience of that trade. So point number 9 is don't be afraid to explore. My friend, you have to be Christopher Columbus when you're trading. You need to be able to explore different markets. That's the only way you know which market suits you. You can't start off and say, okay, I'm just gonna stick to GBP CAD. Okay, so Great British Pound, Canadian dollar. I'm just gonna stick to that currency pair. Okay? Because that might not be the currency pair for you. So where good opportunities may be in that particular market, you might be sleeping because of your location. I'm in the United Kingdom, right? So it wouldn't make sense for me to stick to Australian dollar, Canadian dollar, you know, because there's different time zones. So you need to be able to explore your markets, okay, and explore different strategies as well, different indicators, different time frames, different everything. You need to be able to explore. That's the only way you're going to learn what's best for you. All right, point number 10 is choose the right partner. I'm not talking about relationships, you know, or friendships. I'm talking about brokers, you know. Your broker could be your best friend or your worst enemy. So basically, you've created a trading plan. You know the market you're going into. You've checked your emotions at the door, or you're able to check your emotions at the door. You followed all these, basically 9 steps. Everything is fine. All right? You choose a broker. Maybe you haven't done any research. You've heard, okay, this broker is good based on a Google search or anything. You've not compared it to any other broker, or you don't really know what to look for in a broker. All right? So you've just chosen a broker at random, you know. So you start trading with the broker, and then you find out that your strategy is actually working. You're able to control your emotions. You're making a profit, right? But let's say you plan to make 10%. Realistically, you can make 10% of your capital a month. All right, but the broker you've chosen, you actually only make 3%, right? This could be down to the commissions. The broker is charging too much, you know. So you need to know, okay, well, my strategy, I need to have a broker that's cheaper, you know, or cheap per pips. You know, maybe they charge 0.5 pips. You know, having the right broker is also a fundamental part of a good trading strategy. A lot of people don't realize that. So when I was trading Forex mainly, I basically went through so many brokers. It was unreal. In fact, I don't think there's a broker out there that I haven't got an account with, you know. Alright guys, so those are the 10 points I strongly believe are fundamental and crucial to consider. Part of being a successful trader is arming yourself with as much knowledge prior to trading as possible. You know, in this game, knowledge is power, you know, and you need to attain that power with trading because it'll keep you out of trouble. It'll let you trade when you need to trade, let you stay out of the trade when you need to stay out of the trade. And also, you have a good relationship with your broker or a good broker. And most importantly, it will allow you to stay focused as long as possible when trading. If you're serious about being successful at Forex trading, then you must consider these 10 things that I've just shared with yourself. So if you like this video, make sure you like, comment, and subscribe. And happy trading, guys. And I'll see you in the next video.
game. It's a